Hi, I'm David Bach, best-selling author of Smart Women Finish Rich, with tips on how you can become a smart homeowner despite the challenging economic times. Do you have a mortgage but want to pay less each month? Today's low mortgage rates are giving many homeowners the opportunity to trade in their current mortgage for a brand new mortgage, one with lower interest rates and lower monthly payments. To help you determine if this is the right time to refinance, here are some answers to questions I get almost every day. What does it mean to refinance, and how does it work? Refinancing simply means that you're swapping out of one loan and everything that went with it, the rate, the loan features, and even the lender if you want, for an entirely new mortgage loan. In fact, you pay off your current mortgage with the money you borrow in your new mortgage. Because you're getting a new loan, you'll need to work with the lender to ensure that you qualify for the new loan, which means a new application and closing process. Now I know what you're thinking. I've been paying my current mortgage on time. Why do I need to requalify? Well, first, congratulations on keeping your mortgage current. That's good for your credit score and will help you in the refinancing process. But because this is a brand new loan, the lender needs to make sure you qualify for the new monthly payment, the loan amount compared to the current value of your home, your income, your credit history, and other factors. Keep in mind, lenders now have stronger requirements. That's a good thing because it protects the lender, the economy, and most importantly, it protects you. A responsible lender wants to put you in a loan you can afford to pay back. Another common question is about whether or not it makes sense to refinance right now. My answer is it depends on your situation. Here are some examples that should help. The most common reason to refinance is to lower your interest rate, because that in turn lowers your payment. A general rule of thumb is that it's worthwhile to refinance if the new rate is at least 1 percentage point below your current rate. How much of a difference can that make? On a 30-year, $200,000 loan, moving from 6.5% to 5.5% means a monthly savings of about $130 on your mortgage payment. So you'll need to compare your current rates to rates offered by lenders in the marketplace. A good source for that would be weekly mortgage rate email alerts offered by many lenders. With some lenders, you can specify a target interest rate and receive email notifications when rates hit or fall below that level. The rate is not the only thing to think about when you consider refinancing. As there were with your current mortgage, there will be closing costs such as loan origination fees, title search, insurance fees, local real estate transaction fees, and taxes. All in all, you could expect closing costs to range from 1 to 3% of your loan amount. So how do you figure out if it's worth it for you in your current situation? Generally, the bottom line of refinancing is that it's worth it if you're still in your home by the time the monthly savings you've accumulated equals the refinancing costs. For example, if your refinance cost is $3,000 and you're saving $150 per month because of your lower payments, then you'll break even in 20 months after refinancing. Another good reason to refinance is to change the type of mortgage product you have. A lot of homeowners have adjustable rate mortgages or ARMs, and their current rate may be lower than rates available on 30-year fixed mortgages. But those adjustable rates will likely reset in the future, and they could go much higher. Refinancing now with today's low fixed rates, even though your payment might go up slightly, will end the uncertainty of what the ARM loan could do in the future. For an ARM loan, a break-even analysis doesn't apply, or at least not as conveniently, because you don't know what you'll be paying in the future. So the thing to consider here is how much is it worth to you to eliminate the risk of future payment increases. The last thing I want to share with you about refinancing, and it's true about any home financing, is that it's important to get it right. Your home is probably your biggest investment, and the recent problems in the housing market are largely due to poor financing decisions. So work with a trusted lender and be sure you understand your loan options before you sign any mortgage document. To learn more about refinancing a mortgage or about buying a new home, look for more webisodes in this series on YouTube. And for more great information, free tools, and resources, visit my website at finishrich.com or join me on Facebook.